I'm going to show you how Ethereum's chart is going to move over the next 5 to 30 days, so make sure you watch till the end. And again, this is based off of my analysis of traditional markets that I covered fully in my Bitcoin video today. If you haven't seen it, go ahead and click this video link right here, or wait till the end. I'll link it to you there as well. And it's based off the idea that I have strong reason to believe that the bear market rally has concluded. And make sure you watch that video because it's going to make this Ethereum chart make so much more sense if you have a good understanding of what traditional markets are doing. Let's get some Ethereum. I'm using 3 EMAs in this analysis. The first one is the daily 10, which just rejected price. The weekly 10 and the daily 89. Daily 10 white, weekly 10 red, daily 89, which is your bear market rally litmus test, essentially, in both traditional markets and crypto. I mean, hell, even in the price of oil and black market testicles. This is essentially your litmus test, and the weekly 10 is getting ready to meet the daily 89, okay? And I'm also going to use higher low structure and 45-degree angles. It's going to be very, very simple to follow along, even if you're new to just looking at charts. All right, check this out. Right now, the daily 10, I'm going to zoom in on this to see how price has reacted to it. Price went below the daily 10, this is between a failure pattern and a full-on rejection, depending on the time frame you're on. And so what's getting ready to happen here is before any type of bigger bounce can potentially happen, you likely need to touch down on a lower EMA before you can get a stronger rally. So I would anticipate that any type of move up before the weekly 10 and a daily 89 are touched together, essentially by price, you can simply use something, either a projector tool like this, connecting these 3 wick highs here. 1, 2, 3. Okay, everybody, essentially is going to be looking at this and this horizontal here, and where they meet up. I could anticipate price before these are touched. I could see price coming up to take out all the stops for shorts that are hiding above this zone right here where the arrow is. And so I can assume price is going to want to take those stops out up here. All right. And I've labeled it, I think it could go as high as 1928 or 1929, okay? 1928 and change. So before this area down here is said, I can see price getting up to here for that purpose, because there's going to be a liquidity bubble here. And if you use something like BlockFi, I'm assuming there's going to be at least a mid-sized liquidity bubble right here. Okay, so it could come up, and let me draw a little squiggly line here. I could see it before it hits this. I could see price, doing a fake out, racing up, boom, taking these out, boom, doing it one more time, and then hitting the daily 89, which will be moving in this direction like this. I'm going to make that purple, darker purple. There we go. And the weekly 10 will begin slowing down, and it's going to essentially meet up with this daily 89 as well. So you're going to have double support. So I'm not going to guarantee a bounce from there. However, there's a strong probability that from this area, once it hits, you're going to get some type of bounce and you're going to want to link this with what SPX or US 500 is doing at the time this hits. Because if US 500 is getting ready to take another strong leg down right when this is happening, it might not bounce. That would be the one condition where this doesn't bounce. If for example, Ethereum is weak as SPX is making some lower high, and then SPX starts coming down as Ethereum's already here, then it could bust through. So make sure you're paying attention to the SPX chart as this is happening. Does that make sense? All right, now, I guess this went out, so whatever. Okay. And I suggest using either a projector tool. All right. So what's going to happen here is this, and this is why I suggest a projector tool or this rotated rectangle tool, like such. Everybody essentially is going to be looking at this line right here, and people are going to want to trade it, right? And they're going to want to set shorts here and then stops above it. So essentially bots are going to want to take out their stops somewhere in this bubble over this line. I don't expect price to stop exactly there. I bet it's going to go above it just a little bit, perhaps as high as 1929, to take that out and aligns with that. So in this area here, before the daily 89 is hit, I would draw either a projector tool to give yourself some space to account for taking out stops above here, okay, above there, or you can use the rotated rectangle tool, draw a line, make it fatter, move it back up. Either of these works. All right. I kind of like the projector tool, but this works as well. And this is what I could see happening. And it's namely because the daily 10 the price has failed it. So any move up, it's going to be a high lower than this high. But because everybody's going to be looking at this damn trend line, it's probably going to go slightly above a perfect trend line connecting these highs perfectly. Does that make sense? And if folks who trade horizontals, they're not going to be necessarily looking at this. They're going to be looking at this zone where price consolidated, where a lot of people are hiding their stops. So people are going to be horizontal focused folks. Horizontal focused folks. Let's say that 10 times fast. Are going to be hiding their stops here, and then people who are trading more non-horizontal trend lines are going to be hiding their stops just above here. And guess where they meet? In the same exact place right there. And so I could see the next rally come up to there. Making sense? Now, after this happens, then there are two. So, and again, I'm not guaranteeing this bounce, but if it bounces before the sit, that's as high as it goes. Now, what could happen also, regardless of whether it hits this or not, once price of Ethereum finally hits the daily 89, which it will happen. It's just a question of when and what happens first, right? Then you could get a stronger move up that goes well above this extended trend line and then hits that same liquidity area over this consolidation point again. So this is option one, or the daily 10. So this is why you need to keep the daily 10 on, is going to be curling around like this. I'm going to make this white and I'm extending the daily 10. And let me make this a green price path for a more bullish case. What also could happen is, and again, regardless of coming up here first or whatever, just after it hits this, so let's say it, hits this first, comes down, the next price path, it could start getting rejected below here and then fail above and then get scooted down and boom. But in either case, what I anticipate happening, here's the key for this, more bearish case. But in either of these cases, what's going to happen is the daily 10, the white one, is going to start approaching these larger and slower moving EMAs, and price is going to get trapped below the daily 10, but above these two EMAs together, and you're going to form a triangle here. This is probably what's going to happen. Price could, depending on what traditional markets do, it could bust on out of here and do this all over again, really just like continue going sideways for, it could be a couple weeks. But once you start seeing this triangle happen, essentially created by the daily 10 approaching these slower moving EMAs, if it breaks down below here, it's going to go significantly lower. And what is going to be the driver of that is how weak or how strong the crypto markets are compared to traditional markets as SPX is approaching its daily 89. Let me show you an example. If Ethereum is approaching these as SPX, for example, I'm going to use the US 500 chart, essentially the same thing. If SPX is going up like this to get rejected, so it's going kind of up sideways-ish, at the exact same time, Ethereum is touching, like, let's say down here, and you're expecting a bounce. But that's exactly when US 500 starts then coming down from that lower high. That is when you could say to yourself, COSA's little, triangle might not play out because SPX is getting ready to come down and it's going to bust below there, and then use these as resistance. The weekly 10 and the daily 89. I don't necessarily anticipate that happening, because if that were to happen, I think crypto, especially Ethereum, could start outperforming the market and potentially do the pink price path if SPX starts correcting exactly as Ethereum hits this. I would expect a smaller bounce that gets rejected by the daily 10. So what SPX is doing as Ethereum is hitting these EMAs, it's going to be able to allow you to anticipate how price is going to react to both support and react to resistance up above, and the resistance is going to be the daily 10, and potentially this line here labeled 1927. It's going to allow you to anticipate how it's going to react to these levels, and I don't think downside targets below the weekly 10 and the daily 89 are going to be relevant quite yet, because I fully expect them to bounce, but I am going to let you know if it's a breakdown. I just showed you. If this bounce doesn't happen, I just explained how and why. It's because Ethereum floated down to that as SPX was forming a lower high, and then SPX comes down, and then Ethereum goes way below this. Am I making sense there? All right, now over the net. So zooming out a little bit, your next major bounce target, all right, is likely going to be, so this could be a month out, but your next major bounce target is going to be this origin line down here, all right, which is essentially, if you take the previous little range Ethereum was in after it spiked down to about 850 or 880, these two tops here, if you just run a line through them, that's roughly this origin line here, you're going to get a bounce from the extension of this previous range, and it happens to align with the origin line because that's why these stopped here, because there's an origin line here and it got rejected, and then blasted through. So this big candle, and essentially that had a lot of volume as well, happened here because it needed a lot of firepower to get above this line. Making sense here? And so because it needed firepower to get above, it's also, as it comes back down to it, it's going to act as support. So this is a target for farther out. What I covered at first was more immediate price action, but longer term throughout maybe September/October, you're going to want to focus more on the extension of these two tops out in time, and price is going to bounce off that, potentially most likely make another lower high, and then form another triangle here essentially as it continues to battle and use this as support and waiting for a larger EMA like the weekly 10. So this red line, as this red line comes approach, and it shoves price down below it, so you can get a bigger triangle like this, and price over September gets stuck below it, and it won't go below this origin line until the daily 10 or maybe your weekly 10 drives price below it, and that's when you're going to get a bigger spill, right? So in general, over the next month and a half from this wick high, which I think is going to be the bear market rally top. Yeah, it's a huge range, 23% from that wick high down to here, but you're going to get a lot more aggressive move once these same EMAs that I'm talking about approach this origin line somewhere, when Bitcoin's in the high 1400s, low 1500s, that's when all of this is going to transpire. So what I just showed you was how to play the charts within the 5 day, within the 1 to 5 day timeframes. The pocket of liquidity horizontal plus the trend line where everybody's going to be looking at. So you want to widen it and price is going to go above, get stops out, showed you all that. And then also what to expect using the same EMAs as price breaks down below there and SPX is correcting down to its daily 89, how to expect the price of Ethereum to move more in the midterm sense. And go ahead and click this video right here if you missed my Bitcoin analysis, which focuses the first half on traditional markets, and click this video right here if you want to learn how to set up a chart just like mine. And it's a 28-minute trading view tutorial built just for folks who want to have a more profitable crypto journey, and you just got Timothy'd worldwide. Peace.